The Hungarian guest investor program is established by legislation adopted by the Hungarian parliament and forms part of Hungary's broader strategy to attract international investment and highly qualified residents. The program remains fully operational, applications continue to be processed, and all relevant institutions are carrying out their responsibilities under the existing legal framework. Based on our experience, the attitude of the Hungarian authorities towards overseas investors is professional, pragmatic, and generally very positive. Hungary is a relatively small, open economy located at the heart of Europe, and foreign investment has played an important role in the country's economic development for many years. As a result, government institutions involved in economic development, investment promotion, and immigration generally recognize the value that international investors bring to the country. First, the fund follows a conservative investment strategy focused primarily on Hungarian residential real estate and selected low-risk fixed income investments. Our objective is long-term capital preservation and stable growth rather than speculative returns. Second, the fund is subject to multiple independent layers of oversight and protection. Supervision by the Central Bank of Hungary, safekeeping of assets by an independent licensed custodian bank, independent external evaluation of assets, annual audits by independent auditors, strict investment, risk management, and compliance controls, and complete segregation of fund assets from the assets of the fund manager and other service providers. In addition, the fund manager and its shareholders have a strong alignment of interest with investors. Our reputation, regulatory standing, and long-term business success depend on the prudent management of investors' capital and the continued success of the guest investor program. In addition to investor capital, the fund benefits from approximately 10 million euro junior financing called subordinated capital. This junior capital ranks behind the interests of the fund's investors, and it is intended to support the fund's long-term investment strategy. From an economic perspective, this means that any significant decline in the value of the fund's asset would first impact the subordinated capital. In other words, the junior capital serves as an additional risk absorption layer within the fund's overall capital structure.